Gold did not just rise this year, it rewrote the record books. It forced governments, investors, central banks, and ordinary households to rethink what financial safety actually means. And for India, a country that has lived with gold for centuries, this surge matters far more than most people realize. India is the world's second largest consumer of gold, and when its price explodes, it impacts the rupee, imports, household savings, wedding budgets, and even long-term national strategy. At the same time, the United States dollar is weakening at a pace we have not seen in nearly 5 decades. Central banks across the world are buying gold as if preparing for a financial emergency. And global power is shifting away from the systems that controlled the last century. This is not a jewelry story. This is a geopolitical warning. Wait. Let me explain. For most of the modern era, money behaved in a predictable way. When the world got unstable, when wars broke out, when governments changed, when recessions hit, investors fled to the United States dollar. It was considered the safest asset on the planet. The dollar was the backbone of global trade. The American bond market was the foundation of global finance. But in the year 2025, something almost unimaginable happened. Investors began running away from the dollar and straight into gold. Why? Because interest rates became unpredictable. Inflation fears returned after more than a decade of stability. Political pressure on the United States Federal Reserve increased to levels economists had not seen before. Confidence in American institutions began to weaken. And on top of all that, global conflicts began to rise sharply. Sanctions became tools of punishment. Countries realized that their assets could be frozen overnight if they were caught on the wrong side of a political disagreement. In that environment, investors did what humans have always done for thousands of years. They trusted gold more than governments. And nowhere does this shift matter more than in India. For an American investor, gold might be a financial hedge. For an Indian household, gold is emotion, safety, and identity. It is wedding jewelry. It is a traditional savings plan. It is something parents gift their daughters. It is something grandparents store for emergencies. So when global gold prices rise, and when the Indian rupee weakens against the dollar at the same time, the impact is twice as strong. This is why jewelers across India have been changing rate boards multiple times a day. Anything affected by international prices, importers, jewelers, investors, feels the shock immediately. But here is the crucial part most people miss. This rally did not begin this year. The real turning point happened in the year 2022, when Russia invaded Ukraine. After that invasion, the group of 7 countries froze Russia's central bank assets held in foreign currencies. This was a global shock. It made countries ask a simple question. If a nation's savings can be frozen overnight purely because of political decisions, then is any reserve currency truly safe? That one moment quietly changed global strategy. Countries no longer wanted to depend entirely on the United States dollar. They began reducing their exposure to it. They began increasing their reserves of gold, not because they were panicking, but because they were preparing. In the early 2000s, central banks around the world were selling hundreds of tons of gold every year. Today, the exact opposite is happening. Central banks are now buying more than 1,000 tons of gold every year, and they have been doing so for 3 consecutive years. China, India, Poland, the Czech Republic, Turkey, and several Middle Eastern nations have been among the biggest buyers. Central banks do not make emotional decisions. They make strategic ones. And when central banks increase gold reserves at this scale, it signals that they no longer fully trust the global currency system, especially the dominance of the dollar. This becomes even more important when you look at what is happening to the dollar itself. The United States dollar has just suffered its largest 6-month decline in nearly 50 years. For almost 7 decades, the dollar controlled global finance. Oil was priced in dollars, gold was priced in dollars. Most international trade was settled in dollars. Countries, including India, held their foreign exchange reserves primarily in dollars. But in the year 2025, that dominance is weakening. Nations are quietly reducing their holdings of United States Treasury bonds. They are increasing gold reserves. They are building direct currency agreements with trading partners. They are experimenting with non-dollar settlement systems. The dollar is not disappearing, but for the first time since the mid-1940s, the world is preparing alternatives. To understand why this is happening, you must understand China's role. China is now the world's largest producer of gold, the world's largest consumer of gold, and one of the most aggressive buyers of gold for national reserves. China's strategy is clear: reduce dependence on the dollar, protect itself from potential sanctions, and build a safety net made of something that cannot be printed, frozen, or manipulated. Gold is perfect for that. And India understands this as well. Over the past few years, the Reserve Bank of India has steadily increased its gold holdings, not dramatically, but consistently. Because gold offers something nothing else can: neutrality. It does not belong to any government. It is immune to political pressure. It is the purest form of financial independence. Another major reason this rally is so intense is because gold has gone digital. Earlier, if you wanted gold, you had to buy jewelry, coins or bars. Today, you have gold exchange-traded funds, sovereign gold bonds, digital gold wallets, and gold-linked mutual funds. In the past year, India saw its highest inflows into gold ETFs in more than 3 years. Demand was nearly 6 times higher than most financial models predicted. Young Indians, especially those in their 20s and 30s, are now buying gold digitally instead of physically. And that changes everything. Because when millions of new investors enter the gold market through their phones, demand rises faster than ever before. And rising demand pushes prices even higher. But the story becomes more interesting when you look beyond gold. Silver and platinum have also experienced massive rallies, sometimes even stronger than gold. And there is an important reason for that. Gold is primarily driven by fear and uncertainty. Silver and platinum, however, are driven by industry. They are essential for solar panels, electric vehicle batteries, consumer electronics, medical equipment, and clean energy technologies. When gold rises due to fear and industrial metals rise due to demand, it signals that both the financial system and the industrial system are under stress at the same time. That combination is rare, and historically, it often predicts long periods of global volatility. Now, the natural question is, what does all of this mean for India's future? The answer is not simple, but the direction is clear. It means India's import bill could become heavier because we import most of our gold. It means the rupee may remain under pressure as long as global uncertainty continues. It means the Reserve Bank of India is likely to keep increasing its gold reserves gradually. It means more Indian investors will likely prefer sovereign gold bonds, which offer interest in addition to price appreciation. It means personal finance in India will increasingly focus on wealth protection rather than aggressive risk-taking. And it means India may play a more central role in emerging non-dollar trade networks across Asia, Africa, and the Middle East. But the single most important insight is simple. Gold is not rising because people suddenly love gold. Gold is rising because people are losing faith in the stability of the world. When governments feel unpredictable, when currencies feel fragile, when alliances feel temporary, people return to the one asset that has survived every war, every crisis, every recession, and every empire: gold. If this helped you understand the bigger picture, subscribe to Wait, Let Me Explain, where we decode global events in a way that directly impacts your money, your future, and the world you live in.